What's going on, guys? And welcome to U5 Trading, where every video, podcast, whatever we do to help you guys become a better trader is under 5 minutes. I'm your host, Andrew Gelman, and let's just get right into it. So, seeing that this is the first video of the series, we're going to start off with something a little more basic. It's beginner level, it's basic, but I think it's crucial for everyone to understand this first. So, it's going to be candlesticks. Now, candlesticks are an easier way to look at charts. So if you see over here, there's going to be a green candlestick and a red candlestick. So if we look at the left one, right here, this is where the stock will open for the day. It comes all the way up, and it closes here for the day. This is the body of the candle. Okay. Now down here, on the ends of the candle, that's what you call the wicks. So that's where the stock bounces around to during the day. So if the stock opens here at open, it'll come down here to the bottom of the wick at some point during the day, and it'll come back up all the way to the top of the wick, and then it'll come back here and close for the day. Okay. Now this is when the stock closes higher at the end of the day than it opened. Here on the right is a red candlestick. So if the stock is, let's say, on a downward trend, this isn't always true, but if it's on a downward trend, the stock will open here, it'll come down and close here. And it's the same thing as the green candlestick, where it'll bounce around during the day, up here, down here, but overall it'll open here and close down here. So once again, it'll open here, go up to the top of the wick, come down to the bottom of the wick, and then it'll close over here. Now, why is this important? Why are candlesticks more important than regular charting? If you go on Google, Yahoo, Finance, anything like that. Right, so I want to show you guys, if we look at a stock on Google. So let's take a look at, I don't know, let's do Express. So if we look at the 5-year chart, 1 year, 5 year, let's take a look at the 5-year chart. So right over here in 2021, there was a little spike, and it came up to $6, January 29th, 2021. But it's not showing you the whole picture, because it went a lot higher than that. So that's January 29th, 2021. Okay. Let's check it out over here on a candlestick chart. Express. We're going to go to the 3-year, we'll show it. So this spike right here, I'm going to zoom in on it. Zoom in some more. So this is January 27th of the same year. So what you see here is it went a lot past $6, which would be around here. The stock really went to $13.97, and that's not showing up on the other chart. Go back to that. Right here, January 29th. So it's January 29th. Showing $6, which would be right here. Shows that it's very off. This is why it's very important to learn candlesticks early on, because if you see Express starting to go up throughout the time, well, maybe over the next year or so, you'll see it'll come up to, it could come up to here again, $13.97, and this would be resistance. If it went above it and came down, it would be support. This is a very important level, and it's not being showed on the other charts. So I suggest that you guys take a look at candlesticks. Just open up any chart, let's say Nvidia, zoom in, and just do it in your head. Say, alright, well on this day it opened here and it closed here. The next day it opened about the same, dropped down a little, came up to the top, came here, and over time you'll start to see it'll become natural. AM, zoom in. Right here there's a gap up, so it opened here the next day, came all the way up. Then the next day opened here, bounced up, came down, and closed here. So I would just go over some of these and it'll really help you to learn more in the future.